I want to invite you to please take your seats. If you can, please take your seats. Okay, please take your seats. We're ready to start. Thank you. Please take your seats. Thank you very much. Welcome back. The next panel is called Rules of the Game for the Digital Age. And it is my pleasure to introduce to you Lindsay Argalas, who is Chief Digital and Innovation Officer at Santander, who will moderate the discussion. And she's joined by a wonderful group of panelists. Thank you very much.
Great. Thank you very much. Good morning, everyone. And that was a fantastic session, so we will do our best to meet it as well. It's a pleasure to be here with you all this morning. As Alejandra mentioned, our panel discussion is Rules of the Game for a Digital Age. We started talking a bit about that a little bit this morning, and we're going to continue the conversation. As we just heard, we know across industries, the access to technology, the rise of the data economy, the growth of new user interfaces are changing our daily lives. And we want to have the conversation around how we balance that drive and that need for innovation and to do better things for customers with also the need to have fair competition and maintain the consumer protection. We know that despite the rapid change of pace of the technology and the change in consumer behaviors, it's also been very difficult for the regulations and the norms to keep up with that. And we also have been seeing much more changes and abuses of data and things like that with also Cambridge Analytica and Equifax of late. So we want to have a conversation around the importance of preserving and encouraging that digital ecosystem in the spirit of innovation, competition, and consumer protection. So with me today, I am privileged to have 4 distinguished guests. First of all, I have Roberto Viola, who is the General Director of DG Connect at the European Commission. I also have then Francesco Cardi, who's the Chief Strategy Officer at Unfido. Unfido is a reg tech that helps with KYC and security and authentication for digital experiences and providing that service to other companies. We have Bernardo Gonzalez Rosas, who is the president of the National Stock Markets Commission of Mexico. And then last but not least, we have Sergio Furi, who is the co-founder or the founder and CEO of a Brazilian startup called Creditas that does secured personal loans in Brazil. So welcome, gentlemen, and thank you very much. So we'll go ahead and get started. I'll ask a question to all of you. I'd love to hear your thoughts on how we strike this right balance between the desire and the need for innovation and getting the benefits of digitalization for consumers, but also promoting fair competition and consumer protection. And how we think about, is there a general rule of thumb we should be following, or how do we put those things into perspective when at times they can be perceived to be in conflict with one another? Roberto, I don't know if you'd like to start.
Thank you, Lindsay. Good morning, everyone. Really a big thank to you, to Santander, for the invitation. Lindsay, your question is $1 zillion question. I mean, if I would be the answer. Look, I tried to answer with the angle of the European Commission. So the first thing we tried to do is to establish in Europe a digital single market. And we have passed many important reforms to make sure that citizens feel they are in the same space. There are no more digital borders around. And I think we are progressing quite quickly. You don't pay any more roaming fees moving around, very important when you use your favorite banking or insurance apps. Net neutrality ensures you that every app, every fintech is treated the same while accessing the network. Favorite content can be enjoyed everywhere. No geo-blocking anymore, so you cannot push a particular service from a particular country. Customer can select what kind of service. Same rules for privacy that apply, really those rules apply across the board everywhere. Same rules for identification, for electronic identification, very important for know your customer, for instance. So really, I mean, we have created a space where 500 million citizens really enjoy the same rights and the same services in the digital single market. I wouldn't say this was the easy thing to do, but this is now done. Now we are going to stage 2, which is looking at the various platforms offering services, healthcare, mobility, and finance, of course, how to digitize them, and how to reap the benefits, and how to do it, as you say, in a fair way. That, I mean, everyone has a chance. Established companies which are providing trusted services, new entrants, disruptors, startups. This is a very complex task. And one of the key, of course, is same rules, same service. I mean, to make sure that similar situations are treated in similar way. Let me stop here for the time being. Okay, I'm sure you will come back on this.
Very good. We will come back to that one. Francesco, thoughts on this?
Yeah, so I don't think there is any contradiction in trying to create fair competition and at the same time protecting the user and so on. So I think that the two things, they have to go together. I come from an angle that's more specific than the angle that Roberto is coming, so a specific use case that's online identity verification. However, this angle is a very foundational one because it demands to have the ability to provide a digital identity to users. And this problem of providing a digital identity to users hasn't been solved. In fact, your digital identity at the moment is fragmented around multiple platforms. They use Facebook, Google, etc. Hopefully more in control thanks to GDPR, but not in full control of the user, and specifically not a unique one. So we are in the middle of this problem. We are trying to serve financial services in the KYC compliance case. So we do provide digital identity verification, but we're doing this in a context where some foundational elements are not there, and also regulation is very fragmented across Europe. And I can make, because the different financial regulators, they decided to go different ways. And I can go into details if you want to.
Yeah, let's come back to that because I know that's an important one as well. On the macro topic, staying on that though, Bernardo, thoughts on this topic around how we think about balancing the two around the drive for innovation and benefits with the need to maintain the consumer protection as well as fair competition?
Thank you, Lindsay, and thank you to Santander for the invitation to participate. Well, let me talk about a little about the perspective from the Mexican regulator. I mean, we saw in the fintech sector that we had some benefits, clear benefits for financial inclusion, for competition, and for innovation. But we also saw risks relating to financial stability, to money laundering, and also for consumer protection. So how to balance these benefits and risks? We decided that a law was required in Mexico. We are one of the hubs in Latin America for fintech companies. There are 334 companies right now operating in our country. And we saw an opportunity to build a law, a disruptive law, according to the industry, that could boost the benefits, but also mitigate the risks. More than trying to put the same rules to the same activities, we are seeing it as trying to regulate or mitigate the risks that are embedded on these companies, and which are common. There are liquidity risks, there are money laundering risks, there are risks of fraud, cybercrime, and we have tools as regulators for all these risks. What we need to do, and what we stated in the FinTech law, was faculties or powers to the regulators in order to mitigate these risks. And because it's just a changing industry, we decided that it has to be based on principles. And most of the rules and the limits and the thresholds were set or are going to be set on secondary rules, not so in the law, because it's a changing industry. And some of the issues that we're regulating there are e-money companies, e-money platforms, crowdfunding, virtual assets exchanges, and we are creating a sandbox for traditional entities, for traditional institutions, and for fintechs. And also we are regulating open banking in the law. So we'll talk more about it.
Yes, I want to come back to that because you're right. Mexico has been at the forefront, and I want to hear how the experience has been so far. And Sergio, last but not least, would love to hear your perspective from being a startup in Brazil.
Yeah, so thank you for the invitation. So we are a secure lending platform. We are considered by all means probably like a challenger lender, if you want. I don't like the word disruptor because it looks like too chaotic. Definitely like a challenger. So what is happening from our view is the world is changing very rapidly. And this is not only about technologies, about the way that consumers are interacting with that new technology. We launched a company in 2012. We put the website to work like 1 month after setting up the company, and the mobile traffic was 5%. Today is 85%. That adoption of mobile devices is completely changing everything. It's the middle class, especially in geographies like Spain, they don't have computers, but they do have smartphones. And that really changes the dynamics of the industry. I think that it's a completely new paradigm in which the old barriers to entry fall down very quickly. And I think that the opportunity is how can we explore all those efficiencies together as a system, as an ecosystem, if you want. I don't like the word either of fintech because it looks like it's like a totally new phenomenon, and I don't think so. It's as Anna was saying before, banks have always been like technology companies. Yeah. It's just like it's a different way of developing the technology, and probably the business is created at the heart as a technology company instead of a financial services company. Now, the challenge is how can you foster that innovation when a company has like 5 employees, 10 employees, they're in a garage. How can you help them? And regulators all around the world, probably what they are trying to focus is on creating sort of like sandbox frameworks in which you can start like operating. But at a certain point, you will need to be regulated. And it's necessary. We just touch people's money. We lend money to individuals. That is a regulated industry. And this applies not only to the banking sector or the fintech sector, it also applies to the Amazon, Googles of this world. They also need to be regulated in a similar fashion to make things equal and proportional, definitely.
Yeah. Got it. So just building off of that point, Roberto, I would like to get your thoughts on how can we ensure that consumers have the protection they need, that we have the systemic stability regardless of the provider, right? And so you're right, historically it has been the banks providing these services, but now you have other people who are providing some of these services as well. How should we think about that?
Well, I think we should think basically in 2 directions. The first one is clearly there are rules that everyone is bound to respect. So rules about stability, rules about privacy, rules about cybersecurity, those rules apply across the board. So no company can say I'm outside the system and I do whatever I like. And all the European regulation is really customer-centric in terms of providing the necessary transparency, information, if you take something like, in inverted comma, cryptocurrencies, we don't consider cryptocurrencies to be currencies, but still we consider that customers might have to be informed about the risks which are inherent of buying such a speculative product. Now, the point is, and that's the second dimension, of course, there's a customer choice. And what is new in the banking sector is new in many sectors. Same applies to the transport sector. Now customer can choose. And I mean, if you have only one transport system, you only have one bus, so you don't choose really your driver, your bus. But if you have two, you can compare maybe a sharing system and a traditional system, and then you decide also on trust. So this is the point. I think the traditional banking sector has the, reputation, the branding, the trust proposition, which is a very important value proposition. There are new actors that are coming with different propositions. I think also empowering the customer to make choices is also very important, because not only, not everything can be covered by regulation. There's also the importance of the customer valuing the trust. Now, this, of course, implies transparency.
I love the focus on the customer, and I completely agree with all of those points that you just made on the customer focus. Also, you touched on the importance of evaluating and assessing and containing the risk, which was another focus, of course, that you mentioned as well, is taking that as the primary lens as opposed to the activity itself, which is interesting. We'll come back to. Francesco, collaboration between banks and other players. I'd love to hear how your experience has been working with banks and how you think about that combination of banks and smaller players like yourselves or the large tech companies, just the collaboration that's now happening in this new world.
Yeah. I work and the startup is from London, even if paradoxically I'm Italian. I'm not a Brexiteer, of course. I think the collaboration there is working very well. And the FCA, the Financial Authority, has a sandbox, is working in close collaboration with everyone, is fostering innovation a lot. And coming from outside UK has been very, very positively surprised by the environment there. So extremely positive on my side. I have to say that, of course, it's difficult to coordinate governance across so many different stakeholders, but I think that coming from outside UK and seeing UK in comparison with other European countries, I would say that the Financial Authority is doing really well, and the collaboration is working pretty well.
And how is the collaboration, with other tech companies, with banks, other actors in addition to the regulators?
You mean like, for instance, Facebook, Google?
Yeah, the experience that you've had, whether it's with the large tech companies or.
We serve both regulated companies for the KYC use case, but also unregulated, because also unregulated businesses, even if they don't have to verify the identity of an individual, they might want to verify the identity of the individual to build trust in the community, like, for instance, Uber or Airbnb, any kind of marketplace. I'm not sure, to be honest. I don't have data points about how big financial services, big banks, and big companies like Google and Facebook they get along. I think there are synergies, but also tension, because they kind of compete on the same user, and there's this data fight that makes the relationship probably like a competitive. Yeah. But I don't have specific data points on this.
Okay, very good. And Sergio, do you see what kind of experience do you have in Brazil?
Yeah. So I think that this collision between fintech and the banking industry has gone through different stages.
Yes.
I guess that when we started the company back in 2012, it was about ignoring the mere existence of the fintech world. Then we went into 2015, in which everyone was scared to death. So we are gonna disappear tomorrow. We are dinosaurs. And I think that now we are like in the most productive phase, which is how can we help each other? How can we support each other? How can we find ways of collaboration? Because at the end of the day, you can benefit from both worlds, the stability, the reputation, the trust of the banking industry, the agility of the fintech ecosystem, and new entrepreneurs that are trying to realize their dreams. So I think the more and more we are receiving banks in our offices, trying to figure out what's the way of doing that. As good examples, in Brazil, banks are mostly focused on unsecured lending and super prime customers. And they don't necessarily like the idea of increasing volatility and increasing the provision level. The delinquency in Brazil is relatively low for compared to the APRs that you have there, right? So APRs there are on average at 30% and delinquencies at 3%. So I think that there's like a good way of collaborating is refinancing part of the debt that is definitely like sitting in those balance sheets. They have like less appetite for volatility than the one that probably we do have, and we're already like seeing that type of partnerships. Another good example is Santander and Creditas, right? So Santander became an investor in Creditas last year. And I think it's like a good way for the banking industry to learn from those new entrants, get like some potential financial return, and explore new opportunities in that world. And I would say like the third potential way of collaboration is definitely by providing funding to those companies, right? So banks are definitely like sitting on a pile of cash, and their returns may not be like the ideal, especially like in Europe or in the US from an ROE perspective. And there may be like some good usage of that money by investing or buying some of the loans that, for example, we originate, getting like a good profit from that, but at the same time providing like good and cheap financing for us.
So it's good. So you see kind of an evolution of the collaboration between the large banks and the fintechs, and that there's actually
and thanks
good,
God.
good ways to complement one another.
Yeah, and I will also point to the fact that most of I guess that if you want the secrets of the fintech world are based on the fact that these are sort of like hearts that beat differently. It's like a new way of doing businesses, and most of the banks are like trying to figure out how can they implement those new methods. The millennials don't like to work in the same way as we used to work. And so banks are reinventing themselves, creating like new org structures, creating squads to manage the teams, delivering like OKRs for the teams, and making sure that they have like ownership. So the language is becoming like exactly the same. And at the same time, we as fintechs are becoming bigger and bigger, and also being regulated. So I can perfectly map like a curve on what's going to happen in the next 5 years. It's like a conversion to the same point with a much better banking system, much more efficient, and especially with a better consumer experience.
Just a follow-up question. How are you seeing the competitive landscape in Brazil and Latin America evolving, and what are the challenges in the ecosystem that you face? Yeah,
so Brazil is a country with 5 banks dominating like 90% of the market. I don't think that the problem is concentration. In Spain, we have concentration as well, but my mortgage is I think it's at 0.39%. So it's not about like concentration; it's about competition. It's like about how the banks try to kill each other. How do they fight to get like a 1 percentage point of market share? What has happened in Brazil for like a number of years, decades, is that the competitive advantage was basically built upon the branch network. So it's a vast geography. You actually had to be convenient for the customer. And that meant that you had to have like at least a couple of thousand branches. That's like a $2 billion investment. And the new entrants like Citibanks, HSBC, they got into the country, and then they just fell in creating that type of scale. So what is happening now is that technology is suddenly disrupting that thing. So now you don't need the branch anymore. Now the customer is in the smartphone. So that is, from our perspective, that is changing like 2 very specific things in the bank's P&L. One is the fixed cost. You are radically reducing the fixed cost that you need to have in order to cover those customers. And then second, it's dramatically killing the marginal cost. So what is the production cost of delivering like a new loan to an existing customer that logs into the online banking, presses a button with a pre-approved line, and that money falls into the account, it's zero, literally, right? Yeah. So we think that that's started like kicking off, and that's going to change the dynamics of the ecosystem. There are going to be winners, there are going to be losers. I think that thanks God for this house, I think that Santander is really well positioned to actually be one of the winners. Mm-hmm. Great platform for auto financing. They're like the market leader by far, like a reference in the country. Big effort in mortgages. So I think that there are going to be winners, there are going to be losers. Mm-hmm. So people are not going to be able to cut the costs. And when you cut the costs, and that is something like totally new now, when you cut the costs, then you obviously can cut the prices. Because ROEs in Brazil are relatively high, are like at 20%, sort of. So you don't need to increase the ROE. So when you cut the costs and you don't need to increase the ROE, basically you're going to reduce the price. And that's going to be great for the country. And these new fintech companies are also pushing the banks to move fast and do those deployments of technology as well.
On that last point, I know all of us are looking at the great customer experiences, of course, that the startups are notoriously good at. But I think the biggest threat, potentially, is the business model disruption, right? So the cost structure allows them to be very disruptive on pricing and monetize and create value in new ways. And that actually, I think, is equally as important as the new customer experiences that we're taking inspiration from startups on. So
the point, I think, is the user experience is something that you can copy. Mm-hmm. The way of working, it's much more
harder. Yeah.
It's really harder. Mm-hmm. And the disruption is really coming much more in the business model than in the user experience. Banks will eventually copy like a new bank platform type of thing. But the heart of the company, that's really difficult to change.
Yeah, yeah. Bernardo, I wanted to come back to you. You mentioned how obviously Mexico has been at the forefront of trying to have pretty progressive regulation for the fintech ecosystem. Kind of a year in or so, how's it going? What are the surprises to the upside, as well as some of the challenges that you guys are facing?
Well, I mean, as regulators, we are creating all the infrastructure needed, particularly the National Banking and Securities Commission, which I head. We created a new department, a vice presidency for fintech issues. We're creating the sandboxes rules, the APIs rules, and all the secondary regulation required to implement the law. Right now, we are expecting 128 companies to apply for an authorization from CNBV to operate. Within those are PayPal, big companies like that. And we're working with the industry. We're working with the industry, with the fintech industry, but also with the traditional intermediaries, with banks, with credit unions, savings and loans, etc., so that they can apply also to the sandboxes that we created. Of course, we have a lot of challenges. I think most of the traditional entities, I totally agree with Sergio that banks have to change quickly. They have to do the digital transformation. In all industries, that's going to happen, but particularly in banks, it focuses in two things mainly. One, in becoming in open new channels of serving people, and the other one is in using digital intelligence or data analytics to provide new financial services and new ways to offer those. The other threat to, or the things we're working with the law, are the cybersecurity threats. We have had a couple of major events in the financial system in Mexico, and we're working with the industry also to have protocols of response to communicate to all the participants in the industry when one of these events happen, and then how to respond and how to communicate to the public what's going on and how to prevent these attacks.
Mm-hmm. So lots of learnings, I'm sure,
yes.
and work in progress, right? Francesco, I wanted to come back to you. You touched on this briefly in your introductory remarks. The identification technologies face various regulatory guidelines across countries, which makes it very difficult for a company like yourselves to participate and comply in each of those markets. How are you tackling that, and what does that mean for a company like Untitled?
So for us, it's been a limiting factor because, of course, we started in UK. So, UK is a very open playing field in allowing online identification. Someone can argue too open. but it's a very open playing field. US is pretty similar, pretty open. And then when you step into continental Europe, the regulators they have an approach that's much more prescriptive. The regulator task is difficult. I'm not saying it's easy, because you have to balance the risk of cyber crimes against the benefit for the users to be onboarded quickly online. Nonetheless, the problem is that different regulators in different countries, they are going in different directions. So this Botin, I don't know if anyone from Botin, the German regulator here, has been extremely prescriptive, and it demands for do online identification a live chat with an agent. That seems to me pretty obsolete, and it's something that we can't follow because we don't provide. We are not a platform for live video calls. We're trying to do much better. The French regulator, this ACPR, decided to go other way, and the Spanish one, I think it's a kind of a mix in between the French and the German. Again, it's not easy for the regulators, but the problem is that these regulators are not coordinated. They are not enough coordinated. So this means fragmentation, means that different providers in different countries, they are building up like kind of monopolies, and it's difficult for everyone to cross from one country to the other. All of these, unfortunately, are bad news for the European Union, I have to say, even if I'm in much favor for the European Union. And we can discuss about it. Yeah.
I think so.
Yeah.
Roberto, please, your comments on that?
Well, maybe I react immediately to this. So I have no doubt that Francesco is providing a real-life experience, but my team is telling me a different story. It's not only my team is telling me a different, then we'll check the stories. But first of all, there's now, since the 29th of September, a regulation that is applicable all over Europe, which is called eIDAS, yep, which actually imposes the mutual recognition of identities. Yep. Then we have modified the money laundering directive, recognizing eIDAS as a means of identification, yep, all over Europe. Number three, we have created, with all the regulators and with all the companies interested, a group on Know Your Customer, where we are actually making sure that the new eIDAS regulation can be applied as the sole means for customer identification. So I would say probably this is the past. I hope the near future is very different. On public identity, we will work on public identity. Then if a particular provider wants to use the citizenship of a platform, Google citizenship or Facebook, it's the choice of that provider, but that will not be recognized. That very clearly, very clearly. I think in Europe you have a public identity system which is very strong, interoperable, now also recognized by the money laundering directive as the sole means for identification. We are now working with the regulator. So I hope in the future your work will be simpler.
Yeah, and definitely I know the eIDAS regulation, and I'm sure that it's a great way to make everything uniform in Europe. But so far, Botin didn't move in this direction, so it's still.
I hope this is the past.
Yeah. Well, but yeah, for a startup like
the continued evolution of the regulation as well. Question from the audience for you, Roberto: is Europe closing the gap in digitalization compared to the U.S. and China?
This is always the question of the Olympics of digitalization. Look, I mean, of course, I mean, it's undeniable that Europe discovered the internet and digital a bit later than the United States. I think Europe, though, has very great assets in terms of companies, ideas. For instance, if you take the number of papers published on AI, Europe is by far in the lead. I think what we need now is to, after having realized the single market, to really use it at the best and to make sure that every company has a chance. So I would say, looking at the various indicators, if you take the top European countries in terms of digitization, they are even more advanced than the United States. If you take the average of Europe, we are a little bit lagging behind. So it's clearly also Europe needs to also catch up in terms of the parts of Europe which need to accelerate, they need to accelerate a bit more. So.
But the infrastructure has been laid, it sounds like, obviously, over the last few years, which should help, of course, to accelerate with the single digital market.
Absolutely, absolutely.
Okay, very good. Bernardo, a question for you from the audience. What innovation in finance do you think will most help improve people's lives in Mexico? You touched on, obviously, the importance of financial inclusion and really trying to spur that innovation to help bring more people into the fold. Thoughts on this?
Well, I think definitely the fintech industry will be very useful to arrive to certain places where traditional banks in Mexico haven't arrived, and that's precisely rural areas. For example, in Mexico, almost half of the population don't have access to financial services. And most of the localities where these people live are very rural areas, remote areas without connectivity. So we need to solve the problem of connectivity in Mexico. And of course, fintech can be an option once there's connectivity. But you also have the problem of the cash in and cash out of these financial services to serve the communities. So right now there's a big project in Mexico to put broadband in all these localities. It's a project that will finish by 2024, and 95% of all localities in Mexico will have broadband. So that's like the next opportunity to financially include everyone. Right now in Mexico, banks have a segment they are serving, which is quite profitable. Profits in Mexico are around 27% annually for banks, which is quite good. But they need to start moving to other segments. And we believe this competition created by fintechs and by other financial intermediaries like credit unions and savings and loans can be also an opportunity to serve those localities.
Okay, great. Sergio, I wanted to come back to you. Obviously, I'm assuming you have a lot of data. You use machine learning and artificial intelligence, I'm sure, to do very intelligent things with the data. We talked about this morning around the reciprocity of the rules, right? That now there's regulation to ask the banks to open up their data at the customer's request to the customer's benefit. You know, as a startup, how would you think about this kind of data sharing with banks or other players as well?
It really makes like a lot of sense. It's fair, right? You're benefiting from the system. You need to contribute to the system. But the way that open banking is being treated in Brazil, it's actually they are late on that specific dimension. So they have been like very fast in payments and very fast in lending, but open banking just came like at the end. So we are currently discussing with the central bank about how open banking is going to be implemented in Brazil. And the way that it looks like it's going to come is that, yes, we're going to have like free access to the data of the customer, but in order to make that happen, you will need to become a financial institution. You will need to be regulated. And I think that's like it's a crucial point. It's a point in which you say, yeah, you want to get access, that's fine, but then you also need to put your data into the system so that everyone benefits from that. Let's remember that Brazil is a country where it's the second biggest revenue pool in the world in lending. Consumer lending, second biggest. It's ahead of China. China has 10 times more volumes, but 15 times less margins, right? So imagine the magic that you can create if you just reinvent that business model and then create like a business model much closer to the European one with bigger volumes and lower margins. And probably this applies to Mexico as well. Imagine the benefit that you are going to create in the system. Imagine the injection of capital that you're going to make, the amount of employment that you are going to generate indirectly by doing those things. And access to data is crucial. So today, I would say the biggest competitive advantage of the banking industry is the access to data. I mean, we have never been fans of saying, hey, our crazy algorithm, we test like on all those data points and we are like superior. So we really think that the bank has a very strong competitive advantage, especially in a geography like Brazil, that we don't have a credit history.
Yeah.
So if you don't have credit history as a FICO as in the US, how do you know if a customer is good or bad? Yeah, I can tap into the social media, but I bet that it's going to be better if I just get access to the 10 years of checking account history. that customer has.
Mm-hmm. Okay. Very good. I'm conscious of wanting to see if there are any questions from the audience. I have more questions. I could keep going, but any questions we have from the audience for our panelists? More? Don't be shy. Anyone? Okay, I'll just keep going then. Let's see here. Roberto, a follow-up question for you on this one. So like national governments, obviously the European Commission also works by sector. Mm-hmm. But what's interesting now, of course, with digitalization and technology and issues that are now traversing sector, how can the Commission adapt to kind of this kind of change and moving from a sector to more of a thematic one that cuts across sectors?
Of course, it's a challenge for everyone. I have the, let's say, my DG, it's a bit cross-sector. I mean, when you look at what we do, because, I mean, we have the responsibility for cybersecurity across for all of the sectors. The same applies for blockchain, artificial intelligence, economic regulation of platforms. So this is absolutely horizontal, and we try really to speak the multiple languages of the various applications and markets and platforms. And with this trend of everything as a platform, things are becoming similar. Funny enough, the discussion on EID is the same discussion we are having with the health sector, about the health record, mm-hmm. for instance. Mm-hmm. So there are things you can learn cross-sectorally. That's why we are also a bit organized in a matrix form. And so we deal the horizontal issue, but also vertically. And when we go vertical, we also work with the other colleagues. For instance, on FinTech, we have a common task force with the GFISMA. And we work together in an integrated fashion, and we did together the FinTech Action Plan. For healthcare, the same. We work with the DG Sanco in a completely integrated way. We have a joint task force on digitalization of healthcare. So that's a little bit the way. Of course, you have to be flexible and adapt. And also, I mean, also invite stakeholders to work together. Mm-hmm. That's what we are trying to do on two very transformative things, probably disruptive things that are about to happen. First of all is the introduction of artificial intelligence, where we have created an alliance, a European Alliance for AI, where all companies can participate. We have right now 2,500 companies participating to our alliance. And we have an high-level group that a little bit steers the discussion, and we will then go in the next phase into application scenarios looking at key sectors, finance being one of the key sectors we want to then dig into it. Mm-hmm. And then the second thing, we are about to launch a multi-stakeholder initiative on blockchain, mm-hmm. where we want really to lead in the world in terms of a public and trusted blockchain offer. And we will invite all companies to be part of this alliance and work together to make sure that, again, cross-sector, blockchain in finance, but as in healthcare or in transport, we would have solutions that would work in different application scenarios. And
across, okay. A question for you and Bernardo. We had a lot of discussion and debate this morning around the reciprocity, right? We were talking about open banking in the UK and PSD2. I'd love to hear your guys' thoughts on that. Obviously today it's asking the banks to share open up the data. Your thoughts on, you heard obviously our chairwoman's position that it should be for the activity or the service, right, as opposed to just the sector. So would love your thoughts on that.
Sure. Well, regarding open data, I definitely believe in reciprocity. Mm-hmm. Actually, the FinTech law in Mexico requires all financial institutions to share their information, not only with FinTechs, but also FinTechs have to share their information with traditional institutions. Mm-hmm. And this includes 2,200 different institutions in Mexico that will need to apply the new standard. It's a single standard that CMBV is designing and that we are going to publish in the coming weeks. And we've defined three three sorts of data. Open data do not contain confidential information, and it's just the location, for example, of ATMs. Second, aggregate data. This is statistical information. And third, transactional data, which is account balances of a client, of the credit he or she has, that will require the client's consent. And we're creating a regime of privacy of information and security of that information. So that's our view. We are requiring reciprocity. And one important thing, if big techs want to start, for example, making payments in Mexico, they will need to apply for a license as an e-platform.
And so would fall under that regulation.
Exactly, and they will have to comply with a minimum capital requirement, with liquidity rules, etc. So we've created this umbrella for all financial services.
That includes them as well. Okay. Roberto, your thoughts on this one with PSD2?
Well, I have three thoughts. The first one is that competition law applies to data exchanges. And as you know, in the European Commission, we are very serious in applying competition law. We had a few important cases already in the data economy where we have intervened, and we are monitoring very closely what is going on in the data economy to make sure that competition law is applied. And whenever we will find that something is not going the right direction, you can be assured that we will intervene. When we move to PSD2, I think the first thing that I like to say is that we have opened up quite considerably the number of providers which are included in the directive. And of course, all of them, also those that initiate payment, are part of the directive. So we will, again, watch very closely that everyone respects the directive. And we will be very nervous if someone will not do it. So all of you, I mean, are absolutely welcome to flag to us whoever thinks that can escape from this. Because this is very important. Because the directive does something which we believe is very beautiful, opens up to open banking, to nice APIs. You can sync your bank account, you know that? There's an application which is the account that can sing. Mine would be the Pathetic of Beethoven, but maybe your will be better. I mean, I don't know. But there are very important, even more serious things you can do with open banking. And incumbent banking, new startups can really invent and create new things. But of course, it has to be a level playing field. It has to be applied to everyone. Then there's a third answer to this. This directive does not apply of all the information which is shared, for instance, social media. So if a company decides to authenticate the customer with a particular social media account, it's the decision of the company. Then this company is sharing the data with a particular platform. I mean, this is a commercial decision that as long as does not violate competition rule, it's okay in the union. Now, we have, though, introduced a new regulation, which is called the Platform to Business Regulation, which is a regulation that basically intends to have mandate transparency in the business relationship between a large platform and the users of this platform. So, and it goes in two main directions: transparency, so the platform has to inform the business customer what's going on, has to inform if the conditions are changed, has to be clear on which way the data will be utilized. And the second part is all about redressing, I mean, handling complaints, litigation in a simple way, especially looking at small companies and startups. They cannot really have, I mean, thousands of lawyers to litigate with a large platform. Collective redress is also possible. So we are also addressing the general problem of business-to-business data exchanges by this form of regulation. But ultimately, the point is the more the system is open, the more it's using public EAD, the more it's using public API, the less that's the risk of this data capture.
And also more for the benefit of the
Yes,
customer, right?
absolutely.
Exactly. Okay. With that, I know we are out of time. Thank you for the panelists as well. If you can join me in thanking our esteemed guests. Thank you. Okay. Much more to come. All right. Thank you.
That's right. Thank you very much for a great discussion and so much information and ideas. Okay, our next panel is Defining Value in Responsible Business. So it's a bit of a change in subject and will be led by George Bridges, Senior Advisor on Responsible Banking to Santander's Chairman. He's joined by a wonderful group of people, so please, if you could come on stage. Thank you.
Very nice.
Okay, so welcome everyone to this next session. It's great to see so many people here. My name is George Bridges, Jorge Puentes, to those who know me in Santander. And here we are to discuss responsible banking. And I'm absolutely delighted to have joining me what can only be described as a jumbo jet full of talent who have flown in to discuss this very important issue. I'm joined by Danielle Carrera, who is the DG for the Environment in the European Union. From Nairi Woods, founder and dean of the Botin School of Government at the University of Oxford. She's also been an advisor to the UN and the IMF and a writer on global regulation. Hugh van Steenis, who, to those of you who go to Davos, will be no stranger. Hugh was a star analyst, according to the FT, and we all know that's true, at Morgan Stanley and also at Schroders, and is now senior advisor to Mark Carney at the Bank of England. And last but absolutely by no means least, welcome to Michael Schleich, who is President and Executive Director of Action, as well as having been in his time at the SEC and also worked in banking in the US. They all have biographies which make me feel very inadequate, so give them a round of applause, please, and thank you very much for joining us. So I'm a believer that there is in life no such thing as a free lunch. So last night I told my other panelists that they have to have an argument if they want to have lunch. Okay? And I'm also telling all of you now that when I ask you to ask a question, you have to ask a question if you want lunch. And if you ask a question, you'll get 2 portions of lunch. Okay? So I don't want silence, I want engagement. Just before we kick off, I just want to give a little bit of background. Up above me are some facts. They may strike you as random facts, and in some respects they are. But I think that together they set out the challenges that businesses, not just banks, face today. And those challenges have been created by a wide range of trends. Globalization, digital technology, the rising power of customers, climate change, population growth, and then on top of that we see increasing regulation and laws, often in response to those trends, often thanks to the financial crisis, as well as, and I'm sure this applies to many of you here today, which is why you're here, increasing interest in how companies, not just banks, are responding to environmental, social and governance pressures. So that's why we're here today to talk about responsible business and responsible banking. Now those 2 words are rather like, as we say in English, it's rather like trying to define them as like wrestling with a greasy pig. This is a very, very broad concept. And at Santander, we define it in 2 ways, in 2 specific challenges that we see ourselves as addressing that Anna touched on today. Just to remind you, first, the challenge of the new business environment. This is everything from regulation to data, cybersecurity, to making sure that we have a culture that every day, everyone in our business does the basics brilliantly. Just complying with regulations is not enough. You have to do it brilliantly. So that is why we have put so much store in our culture of being simple, personal, and fair. So that's one side. Being responsible to those we interact with day in, day out, our people, our customers, and our shareholders. One side of the coin. On the other side of the coin is the challenge of inclusive and sustainable growth. And that we all know why that is, why we talk about that. Rising, aging populations, many of whom also haven't got access, as John Bryant was talking about so eloquently, haven't got access to financial services, many of whom feel shut out from society. And then meanwhile, we have the challenge of climate change and the need to transition to the green economy. Now, I'm a strong believer that good business is just that. It does business by doing good. It delivers profit with a purpose. Here, our purpose is to help people and businesses prosper. And that's why, as Anna was saying, we put so much store in financial inclusion, into tackling and helping and supporting the move to a green economy. Okay, so that is the wide range of issues. We asked a couple of weeks ago some US opinion formers what they defined responsible banking as being. And I'm going to ask the team just to show the results, if we can, if we don't have any digital disruption. Can we quickly just see the next slide? No. 5. There we go. Okay, so we asked them what they thought. And as you can see here, and this is in a sense not that surprising, but it does show that when you think about responsible banking, we should not just think automatically about green, about financial inclusion. It does mean what I said a moment ago about doing the basics brilliantly. You can see here, 79% of these people think that a responsible and ethical bank is one that protects customers' data safely. Okay, so that's easily enough from me. That's just to try and set up the discussion. I'm now going to turn to the panelists and ask them a very, very simple question. I'm going to start with Nari. Nari, how would you define responsible banking?
All right, well, I guess the piece I would want to highlight to everybody, and good morning, by the way, is that we're not living in an age of disruption which is simply technological. We're living in an age of disruption which is social and is political. And that needs to transform not just what we think responsible banking is, but how we give that message or share that message to the societies in which we work. Just in front of you is a slide that just captures what that change looks like. So in this room, we are all that little blue triangle at the top, which is the 15%, which you might call the elite or the ruling establishment of societies around the world. And the rest of that triangle are the 85% of people whose support and trust we have to do if we're going to do our day jobs and our businesses well. Now, in the old model, it was quite simple. We could sit in this room and decide what corporate social responsibility should be, and we could then report it in our annual report to our shareholders. Job done. But what's transformed across every society of the world is that the 85% no longer trust the 15%. They no longer trust them. The words they use to describe them are greedy, selfish, and sometimes corrupt. So what does that mean for the way every one of us in this room that's part of that 15% needs to rethink what we're doing? It means we're moving into the second triangle, where we've got to accept the fact that 85% of people are not looking to us for trusted information. They're looking to each other. They're looking at social media. They're looking at people they know, either online or offline, and asking, what do those people think? Two big challenges I think that poses for business. So one is, what is your business going to do to actually give society tools to verify whether they can trust you? So not your annual report, not your top-down governance, that's important, but what's your horizontal? What are you going to put in the hands of the public so they themselves can verify whether you're trustworthy? And secondly, it's the point that Anna made this morning about the rules of the game. Because the reason why the 85% don't trust the 15% is because they don't believe that everybody is being held to account for the same rules of the game. And this is leading to some radical changes. In Britain, a free market think tank just did a survey of the British population to find out how they felt about capitalism and about business. Almost 80% of the people surveyed in Britain said that they would like to see water, gas, railways nationalized. 50% said they want to see all banks nationalized. This is a dramatic change. 10 years ago, that would not have been the case. So why do they say that? Because they don't believe that the rules of the game as they're being played, they don't believe that governments are refereeing free markets actively or effectively. And they're right for two reasons. One, over the last 30 years, again, as Anna Botin noted this morning, inequality has risen dramatically, not because of globalization, not because of technology, but because of changes in government policies around tax and labor markets, inflation, trade unions, and the like. That's governments not refereeing free markets. And as a result, the public no longer believe in those free markets. That's really serious for us to think about. So when you ask me, George, what does responsible banking look like? We're only asking what does responsible banking look like because we're really asking how can we rebuild the public's trust in us so that we as a bank, as a university, as an institution, so that we are the people that they come to and we are the people and we can take their loyalty for granted. My answer is this is not about technology. This is about what we expect governments to do and how it is that corporations develop a wholly new horizontal relationship in the societies in which they work.
Brilliant. Hugh, then Michael.
Well, I fear I'm going to lose out on lunch because I agree with Neri.
Yeah. We're going hungry, yeah.
So for me, I think, let me sum it up in I think there's sort of three issues. So the first is, I think the true north for responsible banking is solving client problems responsibly. And I think, John Hope Bryant earlier on gave us a masterclass in just thinking from the point of view of a client and working backwards. And trust, as Neri put it, is absolutely central. So even before seeing your slide, I'd have put protecting clients' data. Individuals and SMEs rely upon their banks for payments and being their custodian of their digital wallet and ID effectively today. And therefore, really honouring that commitment and promise is absolutely central to what I see as success. What I've been interested by as I've met a large number of fintechs is they get that. Because their business lives or dies about whether they're great with customers. And we need to make sure, so for me, a responsible bank has the zeal of a startup, but embedded in the customer processes of a large, obviously complex institution. And the second is to champion a culture which recognizes there are resource constraints. For a long time as an analyst, as an investor, I was always struck that the companies who actually understood resource constraints ended up often being the best ones at environmental policies, social policies, because they understood nothing comes for free. They need to promote diversity. They need to make the best of their workforce. And so having a culture which comes much more clear about resource constraints is probably the best way to then build bottom up what that means for ESG policies. Because I think, as Neri put it well, ESG policies pushed down don't work. And so if your employees want to go no more single-use bottles, then you should do that. And I think that's channeling that culture and let everyone in the organization understand the resource constraints. And the third, measure success. And that's painful, because by measuring it, you will be held accountable. I actually think one of the single most successful public policies in the last 10 years has been the gender pay gap. It's a very simple single statistic, painfully simple, but how much you're paying women versus men in your workforce. We can all come up with a better, each of us probably can come up with a slightly better diagnostic, but as a single tool, it has profoundly shaped the way boards, executive teams, and to Neri's point, the organization as a whole are holding the management to account. And so I really think embedding the measurement of success, however you want to define it, is going to be critical for the success of a responsible bank.
That's great. And we're going to come back to how we define it, which is a crucial point in a moment. Michael and then Daniel.
So first of all, it's great to be here. And the organization that I've run almost for a decade now is Axion. It's a global nonprofit that is dedicated to creating a financially inclusive world. So first of all, I'm thrilled that financial inclusion is so high on the agenda, not just on this panel, but throughout the day. Thank you for that. We grew up in microfinance, and more recently, in the last decade, we've really become a fintech venture capital investor, and we're living in an age of utter disruption of data analytics, the Internet of Things, machine-to-machine technology. All of those are transforming banking and so many different parts of our lives, but they have particular relevance if you're trying to reach 3 billion people for whom the global banking system fails. Here, we take for granted you've got debit cards, ATMs, you've got the fabric of financial inclusion, but for 3 billion people, they are left out, and the global financial system fails them. I think the first question of what constitutes a responsible bank is, who are you trying to bank? Clearly, we don't have a responsible banking system that leaves out 3 billion people. We actually now have the tools to change that. It used to be distances were too far to be surmounted. Now there's no distance that's insurmountable. It used to be that transaction sizes were too small to be commercially viable. Today there's no transaction size that's too small to be commercially viable. It used to be hard to know your customer at the base of the pyramid. Today, data is making people visible who otherwise were invisible. So we now have tools. So Axion is, as I said, a fintech venture capital investor. We've looked at thousands of companies. We've now partnered with, invested in, helped to build more than 100 financial services providers in 50 countries who are now reaching tens of millions of people who otherwise would not be reached. So coming back to the question, what's a responsible bank? It's sort of straightforward. Who are you serving? What are you selling? And how are you selling it to them? So for us, the institutions that we partner with, they're serving people who are otherwise left out. That's responsible. And on how you sell to them, we've created the SMART campaign, which is the world's first global consumer protection campaign for the base of the pyramid. Again, these are the most vulnerable people in the world. And so we've developed what's become the global standard for how to bank the poor. And it's been adopted around the world. But it's very, very important that there's transparency, there's fairness, there's an ability to have complaints and redress. And these are principles that are becoming more and more popular. But I guess I just end by saying, not just responsible banks, but let's think about responsible banking system.
Quite. Daniel.
Thank you very much.
From the EU.
Good morning.
Good morning.
Apologies for bringing some horrible Brussels weather to Madrid.
I thought I brought it from London.
I think we both brought it from London and Brussels. What is a responsible bank? I will be very simple because everything has been said. A responsible bank is a bank you can trust. It is a bank which is concerned about its environmental, about its social, about our economic impact on society, and it is a bank that takes effective action to address this impact. In a nutshell, I would say a responsible bank is a sustainable bank, and there is probably no other sector in the economy other than the banking sector where trust is so important. So acting responsibly and sustainably allows responsible banks to further maintain and develop their trust in their activities. And I think this is the crucial issue, as my colleagues have mentioned.
Yeah, very good. So let's just come on then to how we prove this. And we've talked so far about keeping people accountable, holding businesses accountable, especially banks, and the need for data to enable us to do that. I want to just turn then to measuring success in this field, because ESG are three little letters that is on everyone's lips at the moment. And let me read you what was written in the FT a couple of weeks ago. A journalist, a well-respected journalist there, said, it could mean anything at all. The metrics are all over the place, she said. Hugh, you now look at this from the position of the Bank of England. You've looked at it from the position of Morgan Stanley. We all have data coming out of our ears. We've got more data than we can shake a stick at. How are we using this data? Is it being properly used? How do we create a taxonomy that everyone here and the markets can trust? How is that going to come about?
So I think, first, the data sets, we need to segment what's the data being used for. I think it's important to say what an investor would find valuable to make an informed decision may well be different from what a board will want to try and help run its priorities, which may again be slightly different from what a regulator would want to hold the business to account. It should be like a Venn diagram. A lot of it should be overlapping. But let's be clear, it will not be 100% overlapping. And I think to try and pretend we can get a single set of data standards which cover everything is going to be tough. I think the work that Danielle's leading the EU is fantastic.
I thought we were going to have an argument.
We'll come on to that. But I was going to say, if you wanted a disagreement, the challenge is one should start from the position of humility that there is no one taxonomy will be perfect. Right? Two, I think that where we can be helpful is trying to look at where there are externalities where there aren't good data sets. And so where the public and private can come together to try and get robust data. So for one example, the task force on carbon disclosure brought together a leading number of businesses and regulators together to say, what is a level of data which would be helpful to think about high consuming carbon assets and help investors over a period of time make decisions. And I think that was a great initiative because it was carrots rather than sticks. It got a sensible consensus. But again, I shouldn't underestimate the data in itself is not fit for going in an annual report yet. One CEO I was meeting with last week tells me he thinks it would take 5 years to take that data to a level that the accountants will be happy to sign off to put into an annual report. And so, point three, in the meantime, I would use rules of thumb and simple diagnostics as much as complex ones. And I think the smartest investors are trying to bring together big data, machine learning, through algorithms, trying to work out what does work in practice. But given the data is brand new, some of it is we're still sort of learning by doing. And so I think having some simple rules of thumb even if the end goal is a perfect taxonomy, we shouldn't underestimate in the journey simple rules of thumb are actually still going to be guiding stars for many boards.
And so how does that, when you're looking at this from the bank, and Mark Carney's obviously been very keen to press the case for banks helping the transition to the green economy, if we haven't got this perfect taxonomy, are we not being hindered and restricted in how we're measuring our progress on that? How does it all fit together?
Well, so I think this is interesting. So the task force on carbon disclosure, let's give an example, started by taking the highest level data and only for a certain type of assets. And just said, let's not be over-ambitious at first because we want to get the system going. And then there'll be then level two will be, how do we map that on each and every investment loan that a bank may choose to make. And so I think it's about starting the journey in a way, in a modular framework, a modular way which can be then built on. And I think that's one critical element. And second is, focus on what matters first. Okay. The carbon transition is so critical to society. Let's start there.
Let me come to Daniel at the end because I want to pick up on what the EU is doing. I want to just ask Nari. Nari, you at the start very eloquently put the case of why the public is losing trust in big business and banks in particular. And I wrote it down in the sense that you said no one is being held accountable. Yeah? Now, clearly, metrics are the way we hold people accountable. Now, what Hugh has just said is the metrics are pretty imperfect. I've got a question. For my sins, I've spent a lot of time in politics. I know that you can have very rational arguments and they bounce off people if they actually the emotional arguments trump them. How do you cut through this cynicism, this layer of mistrust, if A, as Hugh says, we don't even have the data, and B, people are actually acting based on emotion, not reason?
So I would come right to the essence, which is, in my view, governance. What does governance do? It can do one of two things. What it should do, a responsible bank is a bank that takes responsibility. And what good governance should do is make very clear who takes responsibility. Let's not forget, after the financial crisis in 2008, what was said of banks. What was said was, when it comes to promotions and bonuses, banks seem to know with great precision exactly who has done what within their organization. But when they fail and they go into crisis, the entire bank says, we couldn't possibly say whose fault that was. Okay, that's a popular perception that's really bad for banks. It's part of what leads to this backlash against banks. So the fundamental thing that a governance system needs to do is make banks responsible, make individuals responsible within the bank, and ensure that senior management are really making sure that the culture they would like to see pervades the bank. It's hard. You know, I sit as a dean of a school of government. In government, governance is often used so that individuals can avoid taking responsibility, so they can keep remitting every difficult decision either to a committee or even, George, to a referendum. And therefore,
let's not go there. That word is banned.
No, but all I'm saying is that these are governance things that permit individuals not to take responsibility and to say, no, 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 it was that committee, it was that part of the bank, it was this other part of my organisation.
Can I just jump in, though, Unari? I mean, when you talk about this, then, are you wanting transparency on governance, or are you saying that we can actually measure culture, or both?
I'm saying that the very first thing that anybody looking at the bank should be able to tell, and that every senior manager within the bank should be able to say, this is who is responsible for this decision. The answer to the question in 2008, who was responsible for this set of decisions on mortgage repackaging or CDOs or whatever it is, should have been, it is X and Y.
Right. Very good. Michael, then Daniel.
So, I've had this conversation of how do you measure social impact for many years, recently or over an extended period of time with a whole set of Harvard Business School professors who are very, very interested in this. And one of them reminded me that it took more than 100 years to evolve to what we take for granted now, common definitions around ROE, ROI, and ROA. And his message was, we need to work on developing social metrics, but be patient. This takes time to develop that common language. That said, it's not a question of data. We have tons of data. The question is, as I said, we're an investor in double bottom line organizations that are both trying to have a social impact and a financial return. We have scores of metrics. We don't make an investment without without a social impact thesis and then the metrics to follow it. So, for example, you just met Sergio from Creditas on the last panel. We're an investor in that. He's a great entrepreneur. It's a great company. His goal is to reach people who have never been reached before at a lower cost. So what do we track? Are you reaching people you've never reached before? And is it at a lower price? And the answer is yes. Every single company that we have, we can track. The problem is you can't add it up. That kind of company versus a data analytics company versus, there's so many different, it's hard to add it up because we don't have that. We have a framework that we refer to as AQ&M that is being adopted in the impact investing field. Access, quality, and markets. And access is very much tracking exactly what is this company doing. Quality is talking about pricing and its impact in the market. And markets is a much broader, because sometimes our companies can succeed by failing. If a company can fail, but if others pick up the theme, we can have a great impact. So it's a broad way, it's a broad framework to try to track the social impact of what we're doing.
That's great, and we may come back to how investors are viewing impact and that in a moment. Daniel, you are playing a big role in taxonomy as regards especially the environment. Tell us about how the European Union is looking at this issue and beginning to address some of the points that Hugh and others have made.
So I think the point of departure is that with the Paris Agreement and with the Sustainable Development Goals agenda and with the forecast that we have of population in the world, 9.5 billion by 2050, we have to change the way we are producing, the way we are consuming, the way we are conducting our economies. The transition to this low-carbon, resilient, circular economy is now underway, and only to meet these targets for energy and for climate, we would need 180 billion euros investment per year. Public funds are very limited. So we need to mobilize the financial system to ensure that it is possible to have this transition. 2 years ago, in agreement with the industry, in agreement with the financial sector, after a very extensive consultation, we came with this action plan for sustainable finance. How do we make sure that the financial sector can contribute to make this transition possible? And we had a unanimous request. The unanimous request was, you have to start by establishing a taxonomy. We need to know which are the activities which are sustainable and which are not. We need to know when an investor is putting his money in some fund, whether it is going in the green direction or whether it is not. We want to have clarity. There is a lot of greenwashing in the market. Some people come with green bonds. The biggest issuer of green bonds in the world is China. Are we sure they are all green bonds? I put the question. So we need, and this is what we have been doing at European level, to build on this taxonomy. The taxonomy is an effort which we are trying to do as best as we can with the support from the experts from the financial sector, from the regulators at national level, from the academic sector, through a high-level group of experts, to establish, can we establish criteria of what is green, what are investments that are going in the right direction. This will facilitate cross-border investment, and this can make us achieve this transition, this 180 billion euros, which we have to mobilize every year if we want to comply with our Paris Agreement, with the SDGs, with the circular economy. So far, we have come with a framework. We have identified 6 activities, or we have identified at this stage 6 objectives which we believe should lead to this transition: climate change mitigation, climate change adaptation, investment in water, circular economy, waste and recycling, fight against pollution, and also ecosystem services. We believe that healthy ecosystems are very important. But it's very important that in reaching these objectives, we do not go against any of them, because you could have companies that to reach an objective are actually being detrimental to. So we are now working, this is very much work in progress. We will be coming next year on the basis of this work with a classification, which will be the point of departure, because for the time being what we are is analyzing activities and classifying activities for further work on green bond standards, on benchmarks, on parameters. The importance is that this work does not come from Brussels out of the blues, top down. It is very much bottom up. It has the support of the financial institutions. Financial institutions are coming more and more to us saying, we would appreciate that the EU...
And may I just jump in, just because Hugh was saying that obviously it's going to take time to do this, and we shouldn't let the best become the enemy of the good. No. Is that something you would agree with? And if so, therefore, will this be an iterative process that goes along over time?
This will be a complex process, but we have some deadlines. So second half of next year, we will come with the first proposals on the basis of the group of the experts. And of course, this does not prejudge, in the meantime, from the markets to continue developing in a responsible way the investments that go in the direction of the green economy, of the circular economy. And of course, this will not be something, it will not be a one-off process.
Right.
It is an iterative process where we will have to discuss. There are some difficult discussions ongoing. Is this sector clearly green or not? Take the nuclear sector. Or what about a company which is polluting for some activities, but not for others? How do we measure? I mean, it will not be easy, but I am very confident, not only because I work for the Commission, but also because we are having a lot of support from the experts across the European Union, but also beyond Europe, because we have in our expert group also representatives from the United States and from other sectors, regulators, academics, experts in the area, who are helping us to develop this taxonomy, which we will later on submit to the countries, to the member states, and to the parliament.
That's fantastic.
Can I add one
Please.
quick thing? I think we're, as a panel, we're seeing targets and what we can measure from a very top-down perspective. And if you think about it, why do we want targets and measurables? We want them in order that our organizations change their performance and change their culture. And so I just want to inject that even more powerful in changing culture is to ask people at your front line, so in Santander, to ask people at the front line, if you succeed outstandingly well in personal, simple and fair, What will you observe in your work that changes over a year? In other words, to have a bottom-up approach to defining what you're measuring and to use it as a way to get your front line to really focus on your purpose and focus on your culture.
Completely agree about the importance of culture. Hugh, in terms of how you view what Daniel was saying, importance of carrots and sticks for a regulator in hastening the transition to the green economy, how do you view that, and how do you view your role at the bank in terms of this?
Well, I think the best piece of public policy has got more carrots than sticks. And so, but I think the way I view the taxonomy is this is a piece of enabling architecture, and it should not be the only thing. And I think Neri put it brilliantly well. I was looking for simple rules of thumb. I think Neri's is a great one. Start with your staff. But it's not just staff, it could be your suppliers, it could be your customers, and you need to look at multiple dimensions to this. I think second, I'm really obsessed that it's the change in behaviour. And if you think sometimes that what the taxonomies can lead to is, it's a bit like 3 months into a university course giving a test to everyone. Do you want to focus on, and I'm sure, Neri focuses on this, like, say, we've just, you're just about to have one. So, do you want to focus on just the top decile and reward them? Do you want to focus on just the bottom decile? Or would you, and would you like to assume then in 3 years' time they're going to be the same? Or would you really rather say, actually, the quality of education is really about the delta in performance. Have they improved during those 3 years? And so I think actually for public policy, one of the biggest challenges is it's so easy to look at exclusion or the best in class. Actually, the really more complex and far more persuasive for the long-term health of society is year in, year out, or over a longer arc, are you improving? Right. And that's where I think actually you've got to start today. You need to use these rules of thumb internally and externally because the big taxonomy hopefully is around the corner. But actually, I want to see what happens in the next 12 months.
Great. I just want to then segue into Michael. I mean, the role of the regulator in terms of financial inclusion and in terms of especially helping to innovation and fintech. Say a little bit about that. I mean, how important is that for you?
It's critical, especially as we're creating that enabling environment. We work with the Economist Intelligence Unit to produce something called the Microscope, which every 2 years ranks 65 governments in the regulations they provide and the depth of the market for financial inclusion. So we name and shame who's doing this well, who's not doing this well, and it changes. And people have popped up. I've seen regulators cry as they got named, as they moved up, and literally scream when they move down, which is good. It means they're paying attention. But there's so much that government can do here. First of all, one of the correlations that you see is the ones that do well have a plan. Yeah. A national financial inclusion plan. It sounds so obvious, but many governments in the developing world have cabinet ministers who are in charge of financial inclusion, and the first thing they do is create a plan, and that's meaningful. National IDs, credit bureaus, using government-to-people payments, G2P payments, social welfare payments. If you can digitize that, you can help create the rails on which other financial inclusion innovation can ride. One of the things we're seeing in Latin America is requirements for digital invoices and digital receipts. The governments of Mexico and Brazil and Chile, for example, are trying to increase tax compliance and trying to formalize the informal sector. But I'm not sure if they've appreciated, but what they've unleashed is tremendous data for financial inclusion. All of a sudden, not just individuals, but small mom and pop shops who work in cash, if you can digitize them, all of a sudden they become visible, all of a sudden they become creditworthy. So there's much that government can do.
Can I just then pick up, because we've been talking a lot about data and the importance of transparency and disclosure, and then that brings us into the issue of reporting and that old chestnut of long-term, short-termism, and how do we report and how should we disclose? Now, Hugh, you said, and I looked this up, you said in the past that companies get the shareholders they deserve. In other words, they are the ones who are either going to be looking at short-term or long-term. Now, can you just expand a bit on that? I mean, if a company wants to be taking these long-term views and actually saying we're going to be investing for social impact but delivering return at the same time, how does it go about selling that and how important is this?
Well, the proof of the success is the final arbiter, isn't it? So first, I'm not overly convinced that markets are actually always short term. The marginal investor may be short term, but think about the value of the technology sector. Think about how many companies are actually not making that much money today, But actually, over the next decade, the markets do appreciate long-term value creation. But also, markets don't like surprises. So it's about having this arc about, over the medium term, do you know where you want to go? Do you hold yourself accountable? Can you clearly communicate your short, medium, and long-term goals? If something's going wrong, do you confess? Do you get out there early and say, actually, things aren't going quite as well, but here's what I'm doing to remedy it? Or, you know what, this was an experiment. We've learned some stuff from that. It didn't work.
But do you think that the market, I want to just challenge you on this.
Yeah.
I mean, how educated is the market? How educated will it ever be if that's the sign of a responsible business, not to punish that business for saying we've made a mistake?
I think it depends on the type of mistake, doesn't it? And so you can't answer that in a sense. But I think it comes back to the word trust here. It's about building a trusted relationship that what you see is, broadly speaking, what you get. And I think that's what really helps with you need a plan, you need a great culture, but I think in your communication, which is the question you asked, it's about what you see as what you get. And I think so much of corporate communications is polishing stuff, and it doesn't actually end up being authentically believed, or actually because of this process of polishing, when there are mistakes, or when things have gone wrong, or when markets are difficult, the companies are then very, very slow to respond. And so I think more authenticity in communications is probably the best way to build.
What do you think about the long-term, short-term, when you're looking at your taxonomy and how the markets are going to...
I think it is obvious for everybody by now, and those who have not realized are in a big mistake, that the most successful companies are the most sustainable, and that there is no successful business model if you do not include sustainability. The most valuable companies in the world are those who act long-term, who generate value, and who go for sustainability. It is very easy to speculate. It is very easy to go for the quick win. But this doesn't generate value. This doesn't generate trust. And at the end of the day, you do not survive in a market if you are playing just the short term. If we link this to the sustainable finance dimension, I think it is very important that investors are advised integrating this long-term model. And this long-term vision, more than the just short-term quick profit, becomes very important. How do we do it from a regulatory point of view? How far do we go? I think this is the discussion we're having. Do we insist more on this parameter, on that? Are we more demanding or less demanding? I think this is the discussion that we need to have.
Should regulators be more demanding? Should they be looking at...
I think more than more demanding, they should they should try to have things in a different way. And maybe I would not disagree, that we need perhaps to find a way. It is not just about additional burden in terms of reporting for the companies, but about getting the information right, and especially ensuring this transparency so that the investor is fully informed and knows what is happening with his investment and has the trust that we were referring to in order that this is going in a more long-term direction.
Nora, do you have anything you'd like to add?
So I think the loss of trust that we've been talking about this morning is far more profound for open market democracies than it is for other political systems. Because what do you need trust for? You need trust to carry people through what might be difficult. In my day job, we have to persuade people who are 30 years old. They really do need to learn policy evaluation, and that it will become obvious at the end of the year, rather than looking just for day-by-day entertainment. So what does the loss of trust mean? It means that politics in our democracies and politicians are more and more short-term, and it means that the companies in which people invest are more and more short-term, and those two risk locking each other in to an ever greater short-termism. And let's not fool ourselves. What is the competition? There is a competitive model out there, if you take China, which can afford to take a very long view politically and a very long view economically. So I actually think that the problem of short-termism goes well beyond an individual company. It goes to the heart of our systems.
Michael.
You mentioned in the intro, I worked at the Securities and Exchange Commission for several years, and we've had a long debate on our quarterly earnings, part of the pressure that forces short-termism. I wouldn't change quarterly reporting, but I would think about changing tax policy in such a way that you would encourage long-term investment. I think if investments were, if taxes encouraged longer-term investments, I think you would create the right incentives. I wouldn't cut back on disclosure. I love the line that you get the shareholders that you deserve. We tend to be investing in long-term enterprises in difficult markets, and we do attract investors with a longer-term horizon. And the last point I'll make is just, I think the longer your horizon, the more you're going to look at social impact. Because if you're making short-term profits by degrading the environment, eventually that's going to catch up with you. So I think the longer your horizon, the more you're going to look at the social impact.
Quickly, and then we're going to...
I think that's right, but I think we also need to be frank that virtue can have a price. And that if if you're prepared to look out 25 years, you may well there. So to take the Norwegian Sovereign Wealth Fund, which is terrifically long-term, $1 trillion invested, they estimate their returns are 1.9% lower because they didn't invest in weapons, coal mining, and a number of excluded industries. Now, maybe on a 25-year view, that is the right number, but in the short term, it has a cost. And I think, therefore, we need to also be honest that, some of these policies, short term, will be costly, and overcoming the short-termism there eventually is actually difficult.
Responsible business has a cost?
I think responsible business does have a cost. I think in the longer term, it can have signignant benefits, but let's be honest, there is a cost.
I have to disagree because otherwise I won't get the... it's a modified disagreement. I do think when you're talking about climate, when you're talking about energy, when you're talking about education, when you're talking, there are real trade-offs on social impact versus financial returns. It happens, we focus on financial inclusion specifically, and in our world there are no trade-offs, or we have not seen trade-offs in the sense that we're also working at the early stage of the market, the innovation in the market. These companies may fail, but if they succeed, they're not only going to have a huge social impact, they're also going to have a great financial return.
I wanted to come in on this point because I think there's a very important discussion now on the trade-offs, on the cost. And when you discuss the cost, you say, what is the cost of being sustainable? And what is the cost of not being sustainable? And how do you quantify it? And I think there is an issue of quantification and of pricing which comes into place. If polluting, you can do it for free, and there are no consequences. I think at the end of the day, we are not assessing things in a fair way. So I think we have to integrate this element. And if you think that being sustainable is costly, think the cost for the society that you are transferring by acting in a non-sustainable way. The other element of the equation is to show that sustainability is a huge economic opportunity. Going circular, being more resource efficient, polluting less, reducing the cost of your raw materials, of your energy consumption, means more innovation. You can have 600 billion euro per year in savings if you are more sustainable. This is what the EU has quantified with the Ellen MacArthur Foundation. If we go in the circular economy direction, you will reduce the emissions, but we are talking also about the jobs of the future. The jobs of the future will come from the circular economy. They will not come from the traditional sectors. So I think we have to integrate this into the discussion, because otherwise I think it would be too simplistic to say, if you are sustainable, it costs more.
Okay.
George, quick footnote to that,
very
though.
quick.
Wait, you want us to argue?
Yes, I do. I also
what's the incentive to do that? Average life tenure of a CEO in a Fortune 500 company? Less than 4 years. 60% of their shares are traded multiple times per day. The young people I teach look at the heads of companies that have tried to be long-term. They say, you've got to be CEO for at least 5 years to start thinking of your legacy. The minute you do, you're pushed out. So where are the incentives for people leading private sector companies to actually do what my co-panelists are saying?
Great question. I just want to bring in the audience, because I threatened that you weren't going to get any lunch unless you asked a question. And so does anyone have a question, or do none of you want lunch? Everyone wants lunch. Please, any questions? A question here. Someone wants lunch. Is there a microphone here, please? Thank you.
First of all, congratulations to all the panel, because it has been a very interesting session. And secondly, totally agree with long-term investments and sustainability. But how can we change the mind of what we call activist investors? Because they have totally different ideas. How can we change their culture? Thank you.
Very good question. Hugh.
There are
not to pick on anyone.
So the simple answer is, George can send you the piece I wrote in the FT about this. There are good and bad activist investors. I can meet activist investors who've got 10-year horizons, and you'd probably count yourself as an activist investor, to be honest. Yep. Who actually do want to shape the business they're in on a long term. There are also activist investors at the other extreme who are very short term and want a quick buck and off. And so I think but to be fair, there's many investors who are also just buying and selling shares without actually really engaging in investment. So it's not just about activists, good or bad, it's actually about the broader investment community and ensuring that they're actually doing what they equally are true to what they would like to say they're doing.
Daniel, you've got one minute. I'm being told we've all got to go.
We have tools to incentivize investors. We have a discussion in Europe whether we should have a green supporting factor when you are investing in sustainability, in renewables, in the green economy, or to have a brown penalizing factor when you are investing in polluting sectors, in fossil fuels. I mean, there are incentives, there are mechanisms to do it. The question is, we have to choose the right ones.
Okay, great. Now look, Alejandro's going to get very cross, but I'm just going to ask everyone one question. Now, this is a one word answer. ESG, 3 letters, environment, social, governance. Which one matters to each of you most? And then I'm going to ask the audience. So, of course. Okay, environment. Yeah.
Governance. You've got to set the incentives.
Governance.
3 to 1. Okay, audience. It's going to be Athenian technology, so you're raising your hand. E, environment matters most out of ESG? A few. S? A few more. G? I think that's a majority. Okay, thank you very much, panel. Thank you very much indeed.
Muchas gracias, Jorge. Jorge Puentes.
Depends what G means, doesn't it?
Little street.
Thank you very much, George, and the wonderful discussion. Thank you very much. Y ahora tengo el honor.
Now I have the honor of introducing our next speaker, who's, of course, a very inspiring leader, who has dedicated his life to his country, to fostering the well-being of his people and democracy. So we have the great privilege of listening today to Fernando Henrique Cardoso, former president of Brazil between 1995 and 2003, and before that, Minister of Finance, Minister of Foreign Relations, Senator, social scientist, and human rights activist. As president, Fernando Henrique Cardoso was able to stabilize the Brazilian economy, setting the basis for the modernization and expansion of the country, whilst reducing inequality with innovative social programs, improved public health, education, and infrastructures. Santander is very proud to be the 3rd bank in Brazil, and today we are delighted to listen to you, President. Thank you very much.
Muy buenos días a todos.
Good morning, everyone. I think it might be best if I speak Spanish, although I do apologize in advance because my Spanish is maybe a little better than my English, but still not that good at all. So I apologize in advance. Okay, to start, I would like to thank Santander for inviting me to take part in this important conference. And I'd like to say a few things about situation in Brazil after the elections. But before I speak specifically about the results of those elections, what has been happening in the last few years in Brazil? You've heard that I was president, that I achieved this and that, and that's true, but it was a long time ago. And time flies, and people, of course, get behind events. But more as an observer than someone who has any direct influence in political life these days, I think that in the country we have gone through what we might call a perfect storm. because the problems came from all sides and all at once, simultaneously, different problems that we had to overcome. To start, there's been a very strong transformation of our Brazilian society. Of course, not just Brazilian. I would say that we are experiencing the beginning of a new era everywhere. And this new era, like the previous ones, is very much influenced by the new technologies and the new ways in which the relationships between people function. There's nobody of any importance in Brazil, and I don't mean in politics, but in life in general these days, that does not have this tiny computer in their back pocket, a mobile phone, a smartphone in their back pocket, which means that relations between people are that much more immediate and direct. And of course, social academics and politicians and business leaders are not really aware of all of this, what all of this has meant in our society. Because the Brazil we see today is still somewhat the reflection of the Brazil that was built the previous century. And the Brazil of the previous century was a century in which the relations between the social classes evolved, classes which had some cohesion and which aspired to some degree of political influence by organizing themselves into parties which had ideologies that more or less matched the interests and the visions of these different social classes, and which struggled to get a share of power. Power in the past was in other hands. It was in the hands of the landowners, of the great families, and everyone outside those circles had no access to power. But starting in the 19th century, all over Europe, but also in Brazil, and most markedly in the 20th century, power was gradually also disputed by those who had been excluded through political parties that had something to say and which represented the interest of cohesive groups. We hadn't realized that we are now living in a different time from what sociologists called mass societies. But the beginning of this era is characterized by something else, which is the transformation of these mass societies, or societies of the masses, people who belong to different social classes, but who identify as masses that were then manipulated by those who held power, who had influence, towards a different form of organization in which individuals are no longer these homogeneous masses, but want to be recognized in their dignity as individuals. And so it's a new social order which is really difficult to describe in terms of what's going to happen in politics within this new social order, because classes still exist, but they don't have the cohesion that they had in the past. And the masses still there and can still be manipulated, but not as easily, because they want to participate on an individual basis in decision-making. And we don't know how to adapt our institutions so that these individuals can take part in decision-making as they wish. And this is what is being called the crisis of representative democracy, which is everywhere. Every country, we're hearing talk of this crisis in representative democracy and how it is impossible for parties to represent individuals who only feel represented by themselves and who want their votes and their decisions to be counted and to have an impact. We see this in Brazil, but we also see this in the US, perhaps in Spain. Don't want to talk about Spanish politics, but also maybe in the US and in France. And in these circumstances, we once again see demagogues flourishing. Those who know how to speak, as the Greeks put it, have an influence because there are so many scattered, diffuse interests. What brings people together are words. The Bible said, in the beginning there was the Word, and we are again in the beginning, and the Word is having a tremendous weight and can be used, as it was in the US, towards vision, and I'm going to use an expression that my friend Felipe González really likes and always uses, but regressive utopia is what Trump represents to the good old days before globalization. And he won with that. But Macron said the opposite. Future will be better. And he won with that vision too. So we can't really tell what messages will mobilize people. But in Brazil, our society has tremendous social mobility, the new social classes. I mentioned recently that Brazilian economy was able to integrate internal migrants who spoke more or less the same language and had more or less the same religion and the same culture, but there were millions and millions of them. But they were integrated because there was economic growth and there were jobs. But now we have this new society of the type I've described, which is not clearly characterized yet in its essential traits, and we don't have economic growth. We have some economic stagnation with some signs of improvement, but it lasted for 4 years. And we had never had 4 years of no growth in employment, no economic growth. Our GDP fell about 10 points. And the population kept growing, so relative poverty increased. Unemployment reached very high levels for us, 13%. And if you add to that the informal economy, 13% unemployment means roughly about 13 million people. You double that with the informal economy, that's 25 million people. So a very significant part of the economically active population for a country of 200 million inhabitants, but with a very young population. And so this paralysis of the economy generated a lot of fear in our society of what's going to happen to our children, what's going to happen to me. And at the same time, we had another crisis, which is still present, a crisis which has not been felt as strongly in Europe as it has been in some Latin American countries, which is the active and growing and powerful presence of drug trafficking, of organized crime. Organized crime has grown a great deal, and that has added to that sense of economic insecurity, creating a growing unease in our society, because organized crime is next to you in cities like Rio. The difference between rich and poor geographically is tiny. If you live in Copacabana or in the south of Rio, you live right next door to the favelas, and the favelas are the areas where organized crime is more active. And in Sao Paulo, where I live, between my neighborhood, to see somebody who's poor, you actually have to travel 10 kilometers. And to see the impact of organized crime, you have to go a really long way. And so that makes a difference in people's perceptions. But what's really having an impact is the fact that organized crime has increased a lot in the country. I've seen it grow in Mexico. I've seen it grow in Colombia. I went seeking for new drug policies, thinking of democracy, not so much about the drugs themselves. And that's happening in Brazil. Organized crime, violence, people are afraid. And also, one of the heads of the military occupation of Rio at some point, some of the favelas in Rio, was also one of the heads of the military force deployed in Brazil to give humanitarian aid. And I had lunch with this gentleman, and he said to me, in Haiti, population was on our side. In Rio, they're not. Because in Rio, they knew we were going to leave, and the drug lords were going to stay. And so they felt a lot more loyal to them than to us. And someone who lives in poverty or relative poverty in Brazil, their daily lives deal with organized crime, with corrupt police, and also the new evangelical churches, Protestant churches, that are very active in those areas. So that's what they see every day. And that's had an impact on political life. Fear, because they are losing their jobs, fear because of the growing violence, and also the appearance of these new churches. I used to say in Brazil at a certain point that one of the signs of the strength of our democracy was the fact that we knew every name of every judge in the Supreme Court, but not the name of all the generals. Now we start to know a bit more about the generals, but we didn't know any name of any cardinal. But we do now know the names of these pastors of these new evangelical churches. So it's a new context, and it's a context which is filled with fear and which lays the blame of everything on politicians and political parties. Why? Because of all the corruption scandals that have permeated the Brazilian political life. It's not your standard, let's say, run-of-the-mill level of corruption that had always been there on an individual politician's basis. No, it's been organized power structures, the parties that appointed people to specific positions, the head of some of the state companies like Petrobras, of course, but not only, with the goal of transferring funds, which are taxpayers, to tenders that would then be artificially inflated because part of them would be used to pay the cost of democracy and end up, of course, eventually in the pocket of the politicians. And that's what was called the Lava Jato operation, which was a police investigation that eventually uncovered all these scandals, which horrified Brazilians because, of course, there was a terrible stink surrounding politicians and political parties, which were being demonized and, of course, lost all public confidence. And as a result, in the last elections, what happened? A collapse of the traditional political parties, parties that were established after the re-democratization when the military dictatorship ended. I was a senator then, and I helped to draft the Constitution. And I remember something Felipe González told me, that good constitution should be like the Bible, a bit vague, so that it can be reinterpreted over time. And ours is not very vague, it's very detailed. It's very detailed, and it included this horror of authority. So freedom to found a political party is huge. And when I became president, and I tried to put a limit to this, introducing some minimum requirements, votes before you could be recognized as a party, the Supreme Court ruled against me. And so in our Congress, we have now over 25 political parties represented, and there's about 30 that are about to be registered. Why? Because initially parties were involved in, as I said, partnering with the government to have access to those private or public funds. But when that was banned by the Supreme Court as well, the senators and the MPs created party funds. So that's public funding to finance political parties. And the people, the MPs, realized that it was a good idea to organize a political party, because if you created a political party, you would have access to these funds and also get time on television for your campaigns. And so we had a proliferation of political parties, and these political parties started to push the government because, of course, if they weren't appointed to some good ministry or department, they would not vote in favor of your reforms. What reforms? The essential reforms so the country could progress. So that was what was happening, a tremendous fragmentation, political parties. And so a guy has been elected who was an MP, but Brazil, we do distinguish, although this is not in very good taste, between the high clergy and the low clergy. And he was an MP of the low clergy. And so nobody knew him. I had never seen him in my life. And yet now he's the president of Brazil after these elections because he got the votes. Why? Because he became a symbol of rejection of everything that had been done badly and everything that had been gone wrong. And because he wasn't strongly connected to any of the dominant forces, he got basic popular support. He won. But what's going to happen in the country now? Well, in the economy, which of course perhaps to you is of more interest than politics, there are some obvious problems. The country has tremendous potential. It has managed to develop a great deal, particularly in the agri-food and the mining sectors. And all these achievements have been possible because behind them there has been science, innovation, technology, last century's coffee, because of the work from the Agro-Food Research Institute. And of course, there was also a lot of institutes doing research to turn fallow land into crops by developing new seeds. So it's really science that has been behind the miracle of the Brazilian economy. And the same applies to Petrobras, the ability to derive oil from deep shales. This is technology that was Petrobras owned through its research programs with universities. But anyway, the country has moved forward. It's urbanized. 85% of the population now lives in cities or so. And all of that has meant that there's been a great need for infrastructure development and so on. And industry also progressed to some extent because we have a very large domestic market. And so that's tremendous potential. The only advantage of getting old is that you know about a lot of things that happened in the past. And I remember in Korea, I remember, oh, that's going to be an export platform because they don't have a domestic market. Well, we were wrong because the market's now global. And the penetration of Korean multinationals in Brazil was huge. But it wasn't just because of exports. It was our own domestic market. But that's not enough. Technology improved, but not enough. There's still a productivity problem, not just in companies, but generally in the country and with our infrastructures. Our infrastructures have not grown sufficiently. We need huge infrastructure investments. And all that requires confidence. The central issue from now on is to understand how reliable this recently elected government is going to be. And quite frankly, I don't know, because we don't have a government yet. And government will have to be tested. If you've been in a government, you know that it's not enough to want to do things. You have to be able to mobilize support so that you can actually achieve something. I'm not sure whether they're going to be able to do that or not. But I won't say they won't either, because it's possible. And there are opportunities, and I think there has been a very strong transformation of the Brazilian society. And our institutions are solid. I spoke here in passing about that Lava Jato investigation, which blew the lid on all these corruption scandals. But of course that proves that our police and our judges work. And there's a new generation of judges trained outside Brazil, Yale, Princeton, Harvard, and whose vision's not very traditional, and who prize their independence and their autonomy. And the public prosecutors, same thing. When I was senator and we were drafting the Constitution, we had a huge debate because we wanted to have an independent prosecution, because it used to be part of the state advocacy. Now it's a separate function. And you need a public attorney, a prosecutor's office that will be independent. The government cannot control them. Judiciary is independent. We have free press. So we have checks and balances, very strong ones, which may now be tested. We'll have to see how they will operate if ultimately the new president or the new government feels any authoritarian temptations. I doubt that they will happen, because we do have the checks and balances to prevent those tendencies. And people know that the first thing that needs to be done is to have an orderly Ministry of Finance We know that our pension system is not sustainable because people are living longer and their contributions are not enough to cover the costs of those systems. It's going to be something that our Parliament will have to approve, even though it's so fragmented with so many parties. But sometimes things change because the time has come. And in Brazil, that has happened in the past. And I'll give you a simple example. I tried to get a law approved which was called fiscal consolidation or fiscal responsibility law or something like that. It was a revolutionary law setting some limits on budget deficit, and if a public administrator spent over his budget, he was criminally liable. And there was actually no debate. It went right through Parliament. And more recently, they've approved some new labor laws that put an end to a decision that dates back to Vargas, the dictator and first president, so long ago, which said that all Brazilians had to pay a union fee of 1 day's wage. And that funded many, many unions. There's like 17,000 unions in Brazil, only about 200 in the UK. Why? Because we have this union fund. And now Parliament last year finally put an end to that. So sometimes things happen because the time has come, because people are fed up. And people were fed up with listening every day on television and in business meetings and so on, talk about how it's impossible to continue with the current situation with our pension system, which is unsustainable, and it is. And it is, so I hope that it will be possible to change things. It's not easy. I'm not going to go into details. It is difficult. But to at least start some changes in the right direction. Plus, there's something that I also like to add. I think it was Machiavelli who said this. You must be lucky. You aren't always, and luck doesn't depend on your ability. It's a factor beyond your control. What's going to happen with commodity prices globally? Oil, soy. Will they go up? Will they not? There are some risks. Of course, you know better than I do. Another financial crisis. Will that impact Brazil or not? These are things that are beyond the control ex ante of a government. It's a matter of luck to some extent. And so I would say that the problems have been identified. We know what they are. Political forces are somewhat disorganized from the institutional perspective, but there is some willingness. There's a lot of anti-political trends. It's not so much the ideologies, right or left. It's all about the corruption scandals, which drove people to turn to something new and something different. So there was a lot of fear because of the factors I've mentioned and unease. But if that could be mobilized in a direction, which even through a demagogue in the Greek sense, just through words and personal leadership, were to be put on the right track, I would tend to be optimistic. I think that in situations like ours today in Brazil, you have to look at the leadership. It's a paradox because society is more and more individualistic, and everyone's connected individually through the networks, but at the same time we lack references, and we need someone who embodies the moment and who leads the way. Whether we have such a person in Brazil, I don't know. Might we have one in the future? I think we might, and so I think we have to be somewhat optimistic, consider how much has been achieved and how much, of course, remains to be done, and especially that we know that corruption, organized crime, and a proliferation of parties that are businesses and not parties are not a good combination to successfully transform a country which needs a transformation, but which also needs vision. So I think we have to once again have a vision. There is proven business capabilities. There is capital available globally. Of course, the world's another matter. I'm not going to go into that now, but I personally think that a country like Brazil has the benefit of being able to simultaneously be in Latin America without forgetting its European origins, but also its significant African population, and that the US is there as well, and that we can play our own role to protect our own interests by siding with one or the other side, and not be dependent on either, so that we can consolidate ourselves as a nation with its pros, but also its problems. Our main pro, of course, is our Iberian heritage and our ability to accept others, natural tolerance of diversity. And I hope that the new government will realize that that's an asset that we have, this diversity and this tolerance for diversity. And it's something that goes beyond electoral opportunism and a necessary assumption for peaceful democratic coexistence in the country. You have to accept others and you have to abide by some rules. And so we have to strengthen our rules. And I think the essential rule is the Constitution. And there's no chance that in the last statements by the new president, the media were pushing him to say something about whether he was going to comply with the Constitution, and he said that he would. I'm happy he said it. Whether he will or not will depend on our ability to persuade him. In democracy, of course, you have to use the carrot rather than the stick. You have to organize, you have to push, you have to lobby so that you can get the supports. And the support, it's not that I like it, have to be earned not just by speaking on television or giving speeches, but by actively participating in social media. And I am not very good at social media, but I do try, because at my age, of course, there's still a lot I can learn. Thank you.
Muchas gracias, presidente, por tanta claridad y tanta visión.
Well, thank you very much, President, for such a visionary and clear speech. Thank you very much, President, for so much clarity and vision, and we'll remember some of the most memorable parts of your discourse.
We'll have to cross the main hall into another building, and hope you have a good lunch, and we'll meet back here for Presidente González at 2:35, please. Thank you.